Hi, this is P R Sundar. I plan to make a video after seeing many messages in my Twitter, both public and private messages, and many messages to me through WhatsApp, mail, etc. Everybody seems to be bearish, and most of the people asking me, Sir, Nifty will test 7,500 again. Coronavirus lockdown extended. Why the market is going up? Logically, it should go down. Can I short the market? And so on. But surprisingly, there was not even one question whether Nifty will be testing the recent high of 10,000. So the consensus among the retail people seems to be bearish. Let me quote some sayings in stock market. One, buy on rumor, sell on news. So, in the first 2 weeks of March, there was hardly any death due to corona. Hardly there was any spread of coronavirus in India. But still, markets fell drastically. When the Nifty was trading around 12,000, that was the time FIAs had huge amount of short positions. About 85% short positions they were holding when the market was trading around 12,000. Now it has come to 8,000, 9,000. They are squaring up their shorts, booking a huge profits. But our retail people now coming and telling, Sir, coronavirus lockdown will be extended. When coronavirus is there, how can the market go up? So is it the time to short and so on? So always remember, in stock market, buy on rumor and sell on news. Second famous saying, markets worry about lead indicator than the lag indicator. The coronavirus has come. It has affected so many people. They are all lag indicator. So what is lead indicator? What is going to happen during the next few months? And that is where people are drawing some kind of optimism, because the curve is flattening. That is, the number of new cases reported in Italy, Spain are less than what they were reported in the last few days. So now they think that the coronavirus has peaked out. From here, the coronavirus will be affecting less number of people going forward. So always remember, markets worry about lead indicator, not the lag indicator. The third one, only the crying baby gets the chocolate. So it is my statement, my saying about stock market. In stock market, good news is a good news, very good news is a bad news. Similarly, a bad news is a bad news, and a very bad news is actually a good news. What is the reason? Good news is a good news, no need for any explanation. But very good news, say for example, Bajaj Finance shot up from 2,400 to 4,900 in about 1.5 years time. In 1.5 years time, it has almost doubled. It's a very good news. So people who bought at 2,400, when they doubled their money in about 1.5 years, they will be tempted to book the profit. If not fully, at least partially. If anybody bought about 1.5 years before at 2,400, if he has sold half of the share at 4,800 or 900, that means his remaining share becomes free for him. So he does not have to worry how the share price moves in the future. So some huge profit booking is likely to happen, and the markets may fall. The same way, bad news is a bad news. There's no need for any explanation. But very bad news, when it comes, number one, people think the worst is over. Going forward, things may improve. And second thing, when very bad news comes, the governments will step in to support the market. Even on Thursday, the Fed has announced additional stimulus measure Despite huge number of unemployment benefit application, the US markets went up on Thursday. So one guy asked me, sir, will Nifty come 7,500? And I asked him, why do you worry? Whether it comes or not, what does that matter? He said, sir, I sold all my shares and I want to buy back those shares at a lower level. If you are a long-term investor, definitely this is a wrong approach. Just imagine if anybody has sold the shares of Hindustan Unilever or Nestle about 1 month before, expecting to buy the shares back at a lower price. He will never be able to do it. So this logic applies only if you are an investor in Nifty ETF. The stocks may perform differently. When the market falls, FMCG, IT, pharma stocks tend to do very well. Remember, between 2008 and 2014, that was the worst possible period for Indian stock market. But that is the period when Sun Pharma shot up from 100 rupees to 1100 rupees, giving a return of more than 1000%. So stocks work differently. Second, if you are a trader, so what you do? But the most disturbing thing that I'm getting the message is that most of the retail people are heavily buying the put option by thinking market will come down. There is another saying in stock market, consensus is dangerous. When everybody feels market will come down, it may not come down. In my earlier video also, I highlighted buying an option in a high volatile environment is actually not good. Look, yesterday, even the 7,500 put option, which is nearly 20% below the current market price, is trading around 70 rupees, giving a 7% return for the seller. Markets may fall. I'm not saying that market will continue to rise. Markets never go in one direction in a straight line. It goes up and down. Markets may ultimately go down, but it may not go down below 7,500, or it may not go below 7,500 by the end of April. It may go in the month of May or June. So if you are buying a put option, okay, definitely you are going to lose. So I always advise people, buying of an option is only for the high skilled people, not for common people. People need high skill for buying an option. I can tell you very honestly, the skill set that required for buying an option is actually much more than the skill that is required for an option seller. So though option selling, there are a lot of misconceptions in the market. If you are shorting the market, that is understandable, provided you are hedging through selling a put option or buying a call option. So otherwise, in a high volatile markets, most of the traders lose money, whether you are on the long side or short side. So therefore, be cautious, and markets may not fall significantly, in my opinion, irrespective of what is happening on the coronavirus front. So I repeat few of the sayings in stock market. Buy on rumor, sell on news. Good news is a good news, very good news is a bad news. Bad news is a bad news, very bad news is a good news. Markets worry about lead indicator, not the lag indicator. And most important thing, there is something called efficient market hypothesis, which says that you are the last one to know the fact. If you think that coronavirus lockdown is being extended or coronavirus is getting bad in India, does it mean that only you know this news? Everybody in the stock market knows this news. You are the last one to get the news. So therefore, whatever news is there in the public domain, they are all already factored into the market. So therefore, unless you have some insider information, You cannot capitalize or you cannot make profit out of the information that you have, because that information is known to everybody. So thank you for watching. I will come out with another video how to do the hedging in a highly volatile market. Thank you.